Unlock the power of cryptocurrency with Orange Brick Road as your guide. The homepage provides an overview of our services: crypto education, consulting, trading, tax, bookkeeping, loans, real-world assets, estate planning, scam recovery, and more. Explore our comprehensive courses tailored for beginners to advanced crypto enthusiasts. Our team of experts offers personalized consulting across all aspects of crypto, including everything from how to purchase your very first crypto coin, the importance of security, reporting requirements, and the latest developments in the decentralized finance world. Join our thriving community, attend events, and network with like-minded individuals. Stay up to date with our blog covering the latest crypto trends and analysis. Get started today by enrolling in a course or booking a consultation. Navigate the crypto world with confidence. Orange Brick Road, your path to understanding.
Okay. All right. I think we've solved all the tech issues. Hopefully. All right. Welcome, everyone. This is putting crypto into super, or using your super for crypto. I'll just do a little introduction of myself. I'm Brandon from Orange Brick Road. I started this company in 2016. I started in crypto in 2016. I started the company in 2018, 2019. Okay, we are going to be having regular webinars like this. I've already been a part of a few, but not as a host. So it's the first time that I'm actually driving. So if the wheels fall off, I apologize. All right. But we've done our best to sort out all the tech stuff and all the stuff behind the scenes. Okay, so we also, just to let you know, not shilling, but we have webinars coming up with Julia from Ocean Point and Block Square about tokenizing real estate, Jeff going through financial management and leasing, that sort of stuff, and also doing it on security. We'll probably be doing it every 2 or 3 weeks. So if you haven't yet, I'll also put the details in chat. I'll just have to find it. Okay, cool. I will put all the links in there for our WhatsApp group and our newsletter. If you're not a part of our newsletter, it comes out every Saturday. I generally do a live stream with a guest from an exchange or someone in the crypto, and we go through the news and you can ask questions as we go. Speaking of that, if you have any questions as we go, just click on the chat, put something in, and we will get to them. We've got a couple of people monitoring it, so hopefully we get to them in time. So hopefully this will go for about half an hour, maybe 40 minutes. So basically that's about it. So what I'll do is I'll introduce everyone, starting from the top left. Kayleene and her worse half is there. Correct way of putting it, from Mora Wealth. So yeah, just introduce yourself just quickly, Kayleene, and what you guys are all about, and then we'll go to Simon.
Okay, so I'm Kayleene from MWA Crypto Tax Specialists. That is one of our the businesses. So we are specialising in crypto tax. We have clients all around Australia, so you do not have to be in Perth to be our client. And it's also about asset protection. How do you protect your crypto assets and build a legacy wealth for future generations? That's who we are.
Oops, fantastic. All right, so now we have Simon from Coinstash. Coinstash is an Australian crypto exchange that we use from the start too. Just letting you know, on behalf of myself and everyone else, this is not financial advice. This is educational purposes only. So yeah, we'll just take it from there. So away you go, Simon.
Thanks, Brandon. Thanks, Kayleene, and thanks everyone for joining on a Sunday. So I'm Simon. I'm the head of SMSF strategy at Coinstash. We're Australia's leading SMSF crypto platform. I've been involved in cryptocurrencies, digital assets since 2013. Been in Coinstash for about almost 4 years now. All
right. Fantastic. Well, flying straight into it, it's you that are kicking off. Is that right, Kayleene?
Simon, I think Simon was trying to start. Yes.
Right. Excellent. Okay. I'm glad you guys know what's going on. Very helpful. All right, Simon, the stage is yours, mate. And like I said, everyone, if you want to put questions in chat, be my guest, and we'll cover some more things at the end as well. Okay, Simon, it's all yours.
Great. I'll just get my slides up. Move this over to the other screen. Right. Can everybody see this?
Yes.
Perfect, perfect. Like Brandon said, what I'm talking about today is education only. If you want to go ahead with setting up a self-managed super fund, or you're not sure, sorry, about whether or not you should set one up, you should definitely consult a professional before making any decisions. And what I'm going to talk about today is don't rely on it as your only source of information. We've got Kayleene on board, we've got Brandon on board. If you're still not sure, speak with a legal, tax, or financial professional. So like I said, just before, I've been in crypto since 2013. I joined Coinstash in 2021. Prior to that, I was at the ATO. I was also working at KPMG in tax and private clients division, helping individuals and large family groups with saving tax essentially. And then I moved into private and public businesses. I'm a tax agent and I'm also a lawyer, although I saw the bright side. So Kayleene will probably cover all this as well, but I just want to give my perspective as well on what is superannuation. So I'm sure if you have superannuation, it's a main way that you save for your retirement. It's meant to be a long-term investment vehicle. You've got your accumulation phase and you've got your pension phase. And one of the quotes that I like from Peter Costello when he was treasurer back in 2006 is, if you want to save, put money into superannuation, you will never find a better savings vehicle. There are good reasons for that. Main reason is because it's a 15% tax rate, and there are also tax concessions available, very generous ones available to you if there's an investment held inside a super fund as opposed to an individual or otherwise. Going from there, what is a self-managed super fund, or SMSF for short? If you're not familiar with it, or you haven't logged in to check your portfolio, or you maybe just started thinking about how your super is part of your financial equation, then I like to distinguish an SMSF from a public super fund. So a public super fund is something like your Host Plus, your Oz Super, they're industry and retail funds. And the investments that they make on your behalf are managed by a professional investment manager. Very smart people, they know what they're doing. But unlike public super funds, a self-managed super fund, a SMSF, is a private super fund that's managed by the members themselves. So if you have a self-managed super fund, you decide what to invest in. So in terms of super funds, I've got this diagram here, you essentially split between private and public. And there's quite a lot of people who have self-managed super funds. There's about over 600,000 funds at the moment. It's growing steadily. It's about 1.1 million members who are either mum and dads or family members or kids. And there's about $1 trillion in total assets in self-managed super funds, which is quite a significant wealth pool, considering that in total, super assets across public super funds, industry and retail is about 4.1 trillion. So SMSFs make up 25% of all super assets, yet in terms of population, it's around 5% or less. And in terms of the growth over the last 5 years, you can see that in terms of number of people who have self-managed super funds, that slope of the chart is starting to trend upwards, get steeper and steeper. For me, when I speak to our clients and also my own experience, I see 3 common reasons why people set up a self-managed super fund or may want to set one up. The first one is control. It gives members control over their investments. When I say members, it's jargon for yourself, essentially, although I'm not talking about you specifically. A member of a fund is someone who's the retirement savings are for the benefit of. So it gives members control over the investments. They can decide what to invest in. If you want to invest in property, or you want to invest in crypto, or maybe you want to hold a bit more cash, or maybe potentially even if you want to stock, pick your own stocks. Essentially, it gives you a bit more control over and visibility over which parts of the portfolio are performing or not performing. It gives you choice, which is similar to control. You can invest in property, shares, crypto, or other investments, as long as it complies with the super laws. Additionally, it gives you, particularly if you own a business, what I typically hear from clients is that it's part of a broader tax planning strategy. For example, they may run a news agency or like a hair salon, and the hair salon, they may have some extra capital. They buy the premises upon which the business operates. So there's a few reasons, but those are commonly the three reasons. A very common question I get asked is, can my super invest in Bitcoin or any other crypto, for that matter? And the answer is yes. There's about 1.6 billion in crypto already. The only caveat is that the ATO does say that if you invest in crypto must be allowed as a allowable investment under the fund's trust deed. It also needs to be invested in crypto according to the fund's investment strategy, and the assets, so the investment needs to comply with the same requirements as any other investment. So there's a link to the ATO website. You can also Google ATO crypto and super, and that'll give you some information about it as well. But the short answer is yes, but it must be in accordance with the laws. Some reasons why people may invest in crypto with the self-managed super fund, and this is through talking with clients. We've got many clients on platform with crypto investments in the super fund. I break it down to two types. First is crypto as an investment, and then secondly, crypto as an investment in an SMSF, so more SMSF specific focus. In terms of the first rationale, so crypto as an investment, Bitcoin in particular, it's seen as an investment hedge. So hedge against inflation, currency devaluation, against geopolitical risk. And it's almost like a gold 2.0, but a better version of gold. That's a thesis. You might ask, well, it's really volatile, but some people see the volatility as opportunity, particularly if they take a long-term view. With any nascent asset class, volatility tends to be quite high. And you can probably see that in speculative stocks on the ASX or any other stock exchange. The stock prices can be quite wild as well. But as the asset class matures, the volatility decreases. In terms of SMSF specific reasons, it's typically as part of portfolio diversification that someone considers investing in Bitcoin. One really interesting comment that a client said to me that really stuck out is, he said that super is typically the largest asset outside of the family home, and that is, when you put in that perspective, it is a significant pool of assets that you have in your super, and maybe you should start paying attention to what it is that your retirement savings is invested in. It gives you, super, it gives you a bit, SMSFs give you a bit more control over that and visibility and opportunities to diversify. You can access other alternative assets. So not just crypto. You can, like, personally, I have a self-managed super fund. I invest in unlisted assets, gold as well, gold ETFs, and also gold bullion. Yeah, there's just a wide variety of assets. Also suits a long-term investment horizon, particularly if you think crypto and blockchain is going to have meaningful impacts on the way that the world operates in terms of settlements, financial settlements, etc., or even tokenization. Then super is with its tax advantages, it really leans towards long-term investments. And for the younger generation out there, or even if you have family, a typical reason to invest in crypto through super is that you want the exposure, but you don't have the disposable income. Okay, so if you're interested in investing in crypto via your super, how do you get started? Well, first decide whether an SMSF is right for you. The ATO strongly encourages you to seek independent professional advice. If you do decide that an SMSF is right for you, then you must set an investment strategy. And in that investment strategy, you list out the assets that you want to purchase and the reasons for doing so. You need to be sufficiently diversified. And I'm sure Kayleen's done hundreds of these, so she'll be able to guide you through what that means and the process of setting one up. And then lastly, if you choose crypto to be in your investment strategy, then I think it's really important to choose a platform that's SMSF compliant and also reputable. And this is where I get into a bit about how to choose a platform. I'll try to go through these as quickly as possible. The first important factor to consider is that the platform must have an SMSF account type. The second factor is the end of financial reporting. It must be very complete and accurate and comprehensive. There are very specific requirements for a self-managed super fund, given that it goes through an audit every year. So it's not like you do personal tax return where you can get an accountant to do it and then you lodge it. You actually need to get it independently audited by an external auditor. And what this external auditor does is check that your investments are in line with the super laws and your investment strategy and a few other things. And having very comprehensive and accurate reports from a crypto perspective avoids nightmares or additional costs that may arise if you use the wrong platform. Third factor is it should be Australian. SMSFs are very specific to the Australian landscape, and having someone on board, someone who you can talk to, that they understand the SMSF laws in Australia and design the platform to help you not contravene or do inadvertently do something you're not supposed to is quite important. And the fourth factor is spot investments. So by spot investments, I mean you actually own the underlying asset as opposed to a derivative. I know a lot of overseas platforms say, yeah, you can buy gold. You can buy Bitcoin or gold or even Ethereum or crypto, but you're not actually buying the underlying asset. You're buying a derivative. And for SMSFs, you can only buy derivatives in very limited circumstances. If you were to buy derivatives, so like a perpetual future, to get exposure to Bitcoin or any other assets, it could result in auditor difficulties. And also, your accountant may not be very happy with it too. I'll go through these. I'll pick up the important things. I won't go through each, but I think how do you know if you set up your SMSF account correctly with the platform? First, you got to ask yourself, did you submit a copy of your trust deed? If you didn't submit a copy of your trust deed, then the platform probably doesn't know that you wanted to create an SMSF account. And some platforms like Coinstash, you can actually open up a specific SMSF account type. And that helps you keep your SMSF funds separate from your personal funds, because that is a requirement of the law. In terms of complete end of financial year reporting, one thing that will really make your accountant and your auditor happy is an audited holding statement. So at the end of the year, at 30 June, if you have 1 Bitcoin and 3 Ethereum and a bunch of other altcoins, your auditor needs to be 100% sure that you have those assets, and those assets haven't dissipated, they haven't been lost. And what the auditor does is typically they review your exchange holdings or your private wallet if you self-custody, and they need to get some assurance that those assets are actually there at the end of the year. And one thing that Coinstash provides is we have an independent auditor that comes in, reviews our whole company, reviews the statement that we provide you, and they actually sign off and say, yes, those assets are there. And that alleviates a lot of the concerns or even apprehension that an auditor or an accountant may have. And it just makes your end of year process smooth. The other thing is sometimes if your accountant may use software to help them prepare the end of year returns, look out for software integrations and any automatic data feeds that may improve your accountant's quality of life. I've gone through some of this already in terms of choosing an Australian platform. It's probably, if you can check if they're Australian by looking for the ABN on the website. You can also look for a DCE, so digital currency exchange registration. Yeah, and sometimes you can actually look up the company on ASIC and download the financial reports. There's a few exchanges in Australia to do that. Coinstash does that. We lodge reports with ASIC. You can see our assets and balance sheet items and liabilities and income. So we're very transparent. We don't hide anything. Some overseas platforms don't do that. Yeah, so the last factor is no derivatives. And I won't dwell on this too much because it is a bit technical, but the main thing is, like I said before, some international platforms and even local platforms give you access to crypto through a derivative or margin lending product. And if you inadvertently access those products, it could result in breach of the law. You could lose, could get penalties from the ATO. So just make sure that when you choose a platform, that you're only investing in spot assets, so the underlying assets. And one way you can sort of check for that is if the platform lets you deposit crypto or swap crypto for another crypto. So for example, swapping Bitcoin for Ethereum or Litecoin for XRP, Ripple, then you're likely dealing in the spot market. If the platform lets you withdraw your crypto assets, then 100% you're dealing with a platform that lets you buy the actual underlying asset and not like a paper asset or derivative. If the platform lets you leverage trade or short, then they are offering a derivative, but you need to be careful. Some derivatives are okay, so CFDs. But anyway, to avoid that minefield, then I think go with the spot platform. I've got a couple of minutes. So one thing I wanted to mention is a very common mistake that people make is that when they set up a self-managed super fund, they may have, Bitcoin in their personal name, and they think, oh, I'll transfer that over to my self-managed super fund. So they send the Bitcoin from the personal wallet to their self-managed super fund. You can't do that. If you do that, then that's a breach. How to avoid something like that? Well, firstly, if you really want to contribute to your self-managed super fund, you got to sell your Bitcoin back to Australian dollars, make a contribution from your bank account to your SMSF bank account to trigger that as a contribution. See a financial advisor, see a tax accountant, make sure that that makes sense for you. I'm not saying you should do this, but if you really want to do it, then that's the procedure. And then once the AED is in your self-managed super fund, you buy back the Bitcoin. What Coinstash does to prevent you from inadvertently breaching the laws is that we actually, if you have an individual account, we don't let you transfer from the individual to your super account. We have that control to help you with that. Another thing to do is to help avoid that, breaches like this, is to speak to your accountant, speak with us. We can't give you advice or tax advice, but we can point you in the right direction. So yeah, lastly, what makes us different? Like I said before, we've been around for quite a while, since 2017. Coinstash has been operating. We were one of the first exchanges to be registered with AUSTRAC. We get audited annually. We give you audited reports as well. We only have spot products. We don't have derivatives. We also have a banking relationship with In1 Bank. If you have issues transferring to exchange, we work with a bank that can alleviate some of those issues. And we have a lot of coins. We have over 1,000 coins. So it gives you the opportunity to diversify. And yeah, we've got industry-leading security. We've never been in a security incident. We lodge audited reports. We use Fireblocks and Ledger as institutional grade wallet solutions for us. Yeah. Maybe the only thing that I'd like to end with is we have an accountant portal where if you have a self-managed super fund or personal account or company or trust account, you can collaborate with your accountant by inviting them to view your portfolio, and they can export the transactions that they need or integrate with whatever tax software or SMSF software that they use. And we've got support 8 a.m. until 11 p.m. 7 days. So you can talk to someone if you have any questions. That's it from me. I'll pass it over to you, Kayleene.
Thank you, Simon. It was well presented. Thank you very much for that. Now I will share my slides. Now I will be touching on a few things that Simon has already. So I guess it's just you'll be hearing some stuff for the second time. What is an SMSF? It is a private super fund. You can have up to 6 members. You can have both a SMSF and a retail fund. Some people like to keep their retail fund for the insurance purposes, because if you want to take out insurance in your self-managed fund, you actually have to go through all the health checks with the doctor and get passed off by the insurance company. So for that reason, some people like to have both. So it is optional. You don't have to. So an SMSF versus a retail fund, it really comes down to control, as Simon has already mentioned. You get to choose where you want to place your investments. And unlike a retail fund, you just choose some sort of strategy and you don't have any actual say in what that is. So that's really what is the advantage of an SMSF. And of course, you cannot hold crypto in a retail fund. So the roles of a super fund is there are trustees and there are members. Now, if you are going to be a sole member of your SMSF, this means the trustee must be a company. That's the rule. There is no getting around that. So that also will mean that you have to have a director's ID. So for people that prefer not to have a director's ID, and sign up for that digital ID, then you will want a self-managed fund that has at least 2 members. And I know that can be a sticking point for some people, that director's ID. So if you're a member of a fund, you are either the director of the corporate trustee, I apologise, and you are a member of the fund. The trustee responsibilities, there is the compliance, the lodging of the tax return every year. You don't want your your SMSF to become non-compliant, because that means that you cannot contribute to the fund at all if you have employer contributions coming in. The trustee also has to manage the investments, make sure that the sole purpose is for retirement, and avoid any early access or improper use of the funds. Simon has already touched on this. You can invest in all sorts of things in your self-managed fund. You can have shares, managed funds, term deposits. You can own property, and you can also own crypto. Owning crypto is not a problem at all. Getting your money out, of course, you have to meet a whole lot of conditions. So you have to be of preservation age. So if you were born after 1964, that is 60. You can take a pension from your fund. There is a minimum pension requirement, and that is determined by what is sitting in your fund. And if you pass away, then your assets will go to either your spouse or financially dependent children. And there is also an additional tax on superannuation that is transferred to a beneficiary. I guess we can also call it an inheritance tax. The compliance obligation, and again, Simon has already touched on this. If you are going to have a self-managed fund, please talk to your accountant before you go ahead and do this, because not all accountants are on board with owning crypto in a self-managed fund. And more importantly, not all auditors are on board with having crypto in a self-managed fund. It is really important that you actually have an auditor who is happy with crypto sitting in your SMSF. Because if they're not, and they qualify your super fund, which means that you get a bad tick against your name, and then the ATO receives that information when the return is lodged. So it really is crucial to have a crypto-friendly auditor. So just keep that in mind. And we obviously have a crypto-friendly auditor. The one thing that our auditor requires for crypto is that the annual report is actually created by a third party. So you can sign up to Kayleene, you can sign up to Crypto Tax Calculator, whatever other software is available. But if you prepare that report yourself, our auditor won't accept it. He needs the report created by an independent third party. And there are people in OBR that do the crypto reporting at year end. Again, benefits of an SMSF is that you have control over your investments and where you want to take them. Is an SMSF right for you? There is some time involved in owning an SMSF. Unlike having a retail fund where your employer contributes to your fund and then you don't have to worry about anything. If you have an SMSF, there are responsibilities, so you have to have the time to manage them. You need to understand what your legal obligations are in a self-managed fund. The next one is sufficient balance. you need to make sure that there is enough money in your super fund to meet all of its ongoing compliance obligations. So, for example, paying the supervisory levy to the ATO, paying the tax bill, the preparation of the crypto report, as well as the accounting fees. This one is a bit of a heads up. So I'm not quite sure if people are following politics. Labor, if they are elected, have said that they will introduce this Division 296 tax. So what it's going to be is an additional 15% on balances over $3 million and on unrealized gains. So if your Bitcoin is worth more on the 30th of June 2026 as what it was on the 1st of July 2025, and your fund is worth more than $3 million, then you could be paying an additional 15% tax. I'm not here to scare you. I'm just here to say this is being talked about and you should be aware of it. But also look at the flip side. You know, if you have a fund that is worth more than $3 million, then hey, that is great. And 30% tax is probably still less than what you are paying currently in your personal name. So don't let this scare you off, but just remember that this is potentially coming. I'm not scaremongering at all. Now, we set up self-managed super funds, and we have been doing it for a long time. So the cost, because I'm sure that will be a question for all of you, the cost of setting up the self-managed fund with an individual trustee, you can see it here on screen, is $2,057. And if you are having a corporate trustee, then because the setup of a company is required, it is a little more, sitting at $4,165. I'll give you a quick, just talk about the advantages of having a corporate trustee. Not only if you're an individual member, but if you are 2 or more members, a corporate trustee also can save administration at some point down the track. So if someone retires and pulls out all of their funds, then you have to go to the bank if you're individual trustees and change the name of on the bank account. You would have to advise your crypto exchange that the trustees are now different. So there can be some administration where you're changing the trustees. But if it's a company, all you're doing is changing the directors. Nothing else is changing. So that makes things a little bit easier. The other thing that we do, along with setting up your self-managed fund and providing you with all of the correct documentation, we will apply for your tax file number, your ABN, the electronic service address, which you need to give your employer if you're going to be paying employer contributions into your fund, and also on the rollover from your existing retail fund over to your SMSF, they will require the electronic service address. You have to set up a bank account, and those bank account details must be provided to the ATO. Now, we will advise the ATO on your behalf that of your bank details. So that has to happen before the rollover can happen. And that is the end of my slides. So now I will hand back to Brandon. Or it won't be a moment, Brandon. Let me just stop sharing. There you go.
Yeah, hi mate. Thank you very much for that. I'm just answering a whole bunch of questions here at the moment, which we'll get to in a sec. Just put into the chat. Okay, send privately. All right, sorry, I'm still running this ship, learning how to do it all. Okay, cool. Sorry?
You're doing a great job.
Thank you, mate. I appreciate it. I have a very, yeah, I'm emotionally strung. Okay, cool. No, thanks very much for that. Okay, what we'll do now is we'll go, you guys can see the questions in chat. We will just start from the first one. All right, who wants to take the first one? Do you keep your crypto assets within the platform? Okay, cool. Okay, cool. All right, anyone?
Keeping crypto assets on a exchange platform is really not advisable, regardless of what your structure is. I think we all know, not your keys, not your crypto. Exchanges get hacked, so why would you? So keep them in a hard wallet. And from the reporting point of view, you would give whoever is preparing your end of year report the address to your wallet, so all assets can be seen for reporting purposes.
Right, got you. Simon, anything to add on that, or is that taken care of?
I think it's really up to the decision of the trustee. I I'll I take what Kayleen's saying. I just add another view to it, and that is not all SMSF auditors are comfortable with the blockchain, and some of them may prefer having a centralized third party involved to take advantage of, particularly like for us, for example, our interfinancial audit reports. And what some of our clients do is that they bring the assets over to a platform for 30 June, and then 2nd of July they move it out to the cold wallets again. And that can save some of the issues, but again, it really depends on, I guess, the exchange that you use. There's also variables here. So the exchange that you use, the accountant that you use, and the auditor that you use, and whether you want it to be a long-term storage or if it's like short-term to take advantage of certain things.
Okay, can you please post the questions? I cannot see other people's questions, and it's difficult to follow the response. Martin, sorry, mate, I don't know how to do that. Sorry, brother. We're going to be running this again in another 2 or 3 weeks, and we'll have all the other stuff ironed out. I will read. Can you guys see? Okay, well, that's okay. Brianna toasted it. All right, beautiful. Tax on, do you get credit? Okay, taxing on unrealized gains is crazy. Do you get credit on unrealized losses? Have you guys answered that?
Sorry, what was that?
Oh, sorry, mate. Taxing on unrealized gains is crazy. Do you get a credit on unrealized losses?
Yes, they haven't ironed out all the finer details, but yes,
Okay.
where it's gone down, there will be essentially a carry forward loss, is what they've said, to offset future profits. Yes.
Yeah, cool. And a question, there's a couple here. One is I saw somewhere. I think you answered it anyway, Kayleene, about claiming the wallet and also your expenses on tax, to actually set everything up. Is that also a tax write-off?
It is a deduction if it has been paid out of the fund.
Okay.
But if you with a self-managed fund, you have to make sure that your finances are very separate, and Simon touched on that as well. So expenses have to come out of the self-managed fund account, not out of your personal account. All the invoices need to be clearly in the name of the super fund and not the individual. For example, we have seen someone go and buy a new computer, and it is for the purpose of their crypto in their self-managed fund. But when purchasing it, the person at the checkout person said, "And who's the name on the invoice?" And the person just goes, George Smith. And now it no longer belongs to the self-managed fund. So always make sure that invoices are in the name of the fund and not your personal name.
Okay, we've got a whole bunch of questions piling in here now. Eleanor, question to Kayleene. Is the auditing fees included in the setup costs?
Yes,
2,
they are. Yes.
can one treasure wallet hold personal crypto and self-managed super?
Look, I don't think it's a good practice.
Okay.
I like to see two separate treasures. One is clearly named super fund and
Yep.
one is clearly personal.
Yeah, cool. And the last one was since crypto in self-managed super is a long-term hold, so as an accountant, what would you need for a client?
Sorry, I'm not quite sure I understand the question.
Okay. Since crypto in self-managed super is long-term hold,
Mhm.
so as an accountant, just moved, what would you need for a client?
Um, Again, I'm not quite sure if they're asking what information we need to set up a self-managed fund.
Oh, okay. No, she's just elaborated. What sort of report do you need from a client?
For their crypto holdings at year end, a
Yeah.
really detailed report that has not been prepared by the SMSF member. Okay, so don't subscribe to Coinly or let me say online reporting software and prepare the report yourself. You need to go to someone else. And as I said, OBR does have, if you go to their website, you will see Heidi, you'll see Nexus Reporting. So there are people through OBR that do that.
Okay. Great. Okay. In follow up to my question about expenses, will the ATO require evidence that the expense is for the SMS? Well, what comes to mind is buying a laptop. So as long as it's done from that fund, it should be right. Correct?
Provide a whole lot of information at year end. So we will request bank statements, and for the full year, not just the 30 June. We will require all of the receipts as well, so we can substantiate all of those expenses.
Okay. JB. All right. Jeff, how you going, mate? I can see you there. Please refer above from JB to Kayleene. Not really sure what you mean there, brother. From JB to
I
Kayleene.
think I saw a question from Jeff, so let's hope this is one that he's referring to. When I was talking about the additional tax on balances over 3 million, Jeff asked if you have 6 members, is it 3 million for the entire super fund or is it on an individual balance account, their account? And it is on your own account, not the super fund as an entirety.
Okay. All right. That makes sense. Is that okay there, Jeff? You good, mate? Okay. Well, we've gone a little bit over time, but we've covered a lot. Now, like I said, this is the first one that I've hosted and we set up and are using the VA. And if the Everbright link, I don't think the Zoom link for this was included for some reason, or the follow-up emails, because I've had a few people contact me. So we will be running this again in the next 2 to 3 weeks. But for people that are seeing this, I'll also put this out on the newsletter that comes out on Saturday. If you haven't subscribed to that, go to orangebrickroad.com.au, our website. You'll see join the newsletter, so you'll get updates. So yeah, and also, we're helping people out with their security, which is important. So we pretty much cover everything in crypto. So get hold of us. It's not shilling. It's just there's a lot of money to be made, and there's a lot of money to be lost in crypto if you're not doing it properly. And I'm sure everyone on the panel has experienced both in every way. So yeah, it's ordered to be careful. Okay, so this will be going out on the newsletter. I'll also post it in the YouTube channel and Spotify and stuff like that as well, probably over the next few days. If you have any questions, reach out to us. I have in the chat put in the 15-minute free call, plus a whole bunch of other stuff. I'll just repost it now quickly. And anyone that has any, oh shit, excuse me, my fault. If you guys have any final thoughts, now's the time to jump in. I also wanted to state as well, I've just put all them links in chat now. Brianne just raised her hand. Okay. Yep, ask away, mate. Okay, sorry, I got distracted. Okay, so that's all in the chat. Yeah, that's about it. I think that's pretty much concluded. You guys have any final thoughts?
No, I don't think so. I don't have anything to add. We've certainly covered a lot, and setting up an SMSF isn't necessarily an easy decision. There are a lot of things to consider, and Simon and myself are here to answer any questions. Reach out to us throughout the week. Be happy to have a chat with anyone, or actually probably reach out to Brandon first, I should say. Chat with Brandon. He'll point you in the right direction.
Just a couple of things that have come through. Eleanor, how you going, mate? At retirement age, if I have BTC, Bitcoin, in my self-managed super, do I sell it?
Yes, you can. If you want to convert it into fiat, yes, you can sell it. And if you have retired, then that is tax-free to you. With a couple of, depending on the balance of your member fund. But up to 1.9 mil, I think, is the cap. It's tax-free.
Okay, cool. Martin's just asked, g'day Martin, how you going? If you hold crypto for 12 months or more in your self-managed super and subsequently sell, are you eligible for the 50% CGT discount?
Yes, you are, but it is not 50% like it is in your personal name or in a trust. It is a third.
Okay, fantastic. Brianne, I think we've answered that question. If you guys have no further questions, we're going to tie things up. I'm going to be late, as usual. All right, well, thank you very much for joining us, guys. Thank you, Kayleene. And I highly recommend Kayleene's services. She is highly knowledgeable and helpful, and she's an awesome human being and fully red-pilled. So you can't ask for more than that, peeps. All right, like I said, we'll be running these regularly. We've got Jeff Bowen coming up at some stage. Also, we're doing one on security. Also with Julia about tokenizing real estate. And just to conclude, so far through Orange Brick Road, we've put through 20 odd people through superannuation with Kayleen's help and Simon and et cetera, et cetera. Obviously, I don't do it myself. We've sort of streamlined it, so it is a bit of a process. But it's well worth doing. If you look at inflation currently, I don't know, between 7 to 8% is what they're reporting. I think it's a lot higher than that. And then what you're getting on your super, you're basically going backwards on your super, just with inflation. Not financial advice, but it's just reality. So I think it's a good time to be putting it into an asset that's actually going to grow as opposed to deflate. Okay, that's about it. Thank you very much, everyone, for joining us. It was good in the chat. I've first time driving this car, and we didn't hit any road signs so far, so all good. All right, guys. Talk to you soon.
Thank you so much. Thanks, everyone.
Okay, let's do this properly.
Unlock the power of cryptocurrency with Orange Brick Road as your guide. The homepage provides an overview of our services: crypto education, consulting, trading, tax, bookkeeping, loans, real-world assets, estate planning, scam recovery, and more. Explore our comprehensive courses tailored for beginners to advanced crypto enthusiasts. Our team of experts offers personalized consulting across all aspects of crypto, including everything from how to purchase your very first crypto coin, the importance of security, reporting requirements, and the latest developments in the decentralized finance world. Join our thriving community, attend events, and network with like-minded individuals. Stay up to date with our blog covering the latest crypto trends and analysis. Get started today by enrolling in a course or booking a consultation. Navigate the crypto world with confidence. Orange Brick Road, your path to understanding.